But these are just the initial numbers. Let's try and make a sense with Abneesh Roy as well, who's joining us. Abneesh, your first take on the numbers. The profitability has come in at 2,470 crores. And as far as the total income is concerned, on a standalone basis, that stands at 15,333.
Yeah, I would say slightly weaker than expectation versus street. In terms of revenue, it seems it's exactly in line with our expectation, but it's slightly weaker than the street on the revenue front. EBITDA also slightly weaker. So I would say yes, this quarter our expectation is once we have more clarity on numbers, was a transition quarter wherein the raw materials did correct, but I think the ad spends would have gone up, so we need to see all those numbers. And there was clearly price cuts in detergent and the earlier price cuts in soaps which was there. And rural also, the recovery is more optically there. I don't think big recovery in rural has happened as of now. So in the HFD, clearly the price hikes because of the milk inflation, that is leading to price hikes at HFD. So that's putting the challenge in terms of volume. So these will be my initial comments based on whatever you said.
So that's the first cut. But Abneesh, we have some more numbers now, wherein EBITDA has been up 8.5% on a YY basis, 3,521 crores, and the margins have come in at 23.24%, and that's actually in line to what we were expecting at 23.6%, just a 20 basis point cut from our estimates. So a slight miss on the margin figure. How do you see this number?
Yeah, as I said, we need to see granular details. Yes, margins wise, there is a slight miss. Revenue, it's exactly in line with our expectation. So yes, definitely ad spends would have gone up, and the company is passing on the gross margins towards the customer, because what happens is in soaps and detergent, whenever sharp deflation in raw material happens, the regional players come back. So HUL is being aggressive to protect its market share, expand its market share. I would say that's the right strategy for medium long term. But in the near term, clearly Godrej Consumer, Nestle, Britannia, those companies are expected to grow faster in terms of EBITDA whenever their results come. So HUL is focusing more on market share, because soap detergent, there is a risk of the regional players coming back.
What do you make of the various internals? Yes, it's looking a bit softish, but just wanted to quickly highlight some of the verticals to you if you can take a call. The home care segment, 5,400 crores versus 4,930 crore. Beauty and personal, 5,600 versus 5,300. So looks like beauty and personal care has been a bit softer, maybe a high single digit kind of growth, but home care has managed to report a decent growth.
Yes, it seems that in beauty, the lower end continues to face challenges, because there clearly it is discretionary. And yes, we have seen strong growth in the home care continue. And overall, I would say that the underlying trend, I don't think has changed remarkably. But yes, these are very initial comments. We need to see the results.
Okay, Abneesh, but this time for HUL, it's going to be the first ever numbers being declared under the new leadership of Rohit Java. So how do you see that? But before that, we also are waiting by to see the volume figure by the company. The expectation is around 5%. So what's your outlook on the volume figure? And also going ahead, what sort of rural recoveries you are hopeful from HUL management?
5% volume growth, so waiting for that number. But yes, rural, there is some bit of recovery, largely because of base effect. MSP hikes are also happening, and generally because of the lot of state elections, there is a stimulus program. You have seen in Karnataka, for example, a lot of stimulus programs. So those would be supportive. On the other side, the El Nino is a risk which we need to see. Plus, there are floods which are happening in some places. So it's going to be an overall dynamic year in terms of rural. Worst seems behind, but I would expect that currently urban continues to grow faster than rural for most of the companies.
Okay, Abneesh, we also have the volume figure from agencies. We do have the number wherein the volume growth has come in at 3%. The underlying sales growth was seen to be at 7% with a volume growth of 3%. And like you were highlighting that the worst seemed behind. So this 3% number versus the expectation of 5%. Do you see this as the worst number that being reported by the company?
No, it's a growth, right? So it's a growth. Currently, as I said, there are price dynamics which are changing in soaps and detergents. So we need to see in that context. See, what happens is when price cuts happen, then the trade also lowers in terms of distribution inventory because they expect one more round of price. So always the destocking is seen. So those impact we would need to get more clarity. But overall, we were expecting 5% volume growth. Against that, 3% is slightly lower number.
That point is taken. Abneesh, just hold that thought. We also have Kaustubh Pawaskar joining us on the show. Kaustubh, your first take as far as HUL is concerned. The volume growth has come in at 3% versus 5% expected. A bit of a miss on the top line, a bit of a miss on the margin front, and that's the reason the profitability is lower than expected.
Yeah, so on volume growth front, we were also expecting around 4.5% volume growth, and it came at around 3% for the quarter. So it is a miss on the volume front, a 2% miss on the revenue front. Margins more or less came in line with what we were anticipating at around 23.2% OPM. We had to understand that this quarter, not only there was increase in the promotional spends, but also there was an impact of increase in the royalty charges as well. So it was expected that the operating margin expansion would be lesser than the gross margin expansion. So 50 to 70 bips kind of a operating margin expansion was expected, and PAT growth came at around 9%, which was lower than what we and Street were anticipating around 12 to 14%. But it is so it is a miss on the performance front. But yeah, I would also agree to the fact that what Abneesh said. One thing, because of the destocking, there might be an impact. On another thing, what I believe is that normally this price cuts or this thing, it also come with a lag into the market, and the impact. We need to understand how how exactly it has been pan out in this quarter. So we believe that things should improve from here, and if rural recovery is there, I think things
Sure.
could further improve in the quarters ahead.
Sure, point taken. But if I read the commentary coming in from Rohit Java, and of course this is the first time they're officially hearing from him as the CEO and MD, he says in the near term, FMCG industry will continue to witness rebalancing of price-volume growth equation and a gradual recovery in the consumer demand. In this environment, we will continue to provide superior value to our consumers. And if you go by the commentary that is coming out as far as the presentation is concerned as well, they are saying that in case the commodity prices remain where they are, the price growth is expected to be flattish to negative in the coming quarters. And I repeat, he says that if commodities remain where they are, our price growth will be flattish to negative in the coming quarters. Let's go across to Vinny to try and understand what she's hearing from the ground. She's right there at ground zero outside the HUL headquarters. Vinny, your first take on the numbers. What do you make of it?
So, Anisha, when you look at the numbers currently, seems like, profits and margins, that's a slight bit of a miss that is coming in according to the ET Now poll when we compare it over there. That's a miss there. But revenues are in line, and looking at the number, revenues seen a growth of around 6%. Margins have come in at 23.2%, and what we're expecting was around 23.6%. So, a slight bit of a miss on the margin front over there as well. Now, volume growth number that we're watching out for as well, that is the underlying volume growth is coming at 3% for the company, while the sales growth is at around 7%, like I mentioned. Home care, that's seen a growth of 10%, while beauty and personal care, that's seen a growth of just 4% this time around. Food and refreshments, obviously we were expecting that impact coming in on because of the ice cream, the summer sales, that was seeing a bit of an impact, so keeping an eye out on that. While obviously in terms of overall, when you look at it, management commentary, gradual recovery in terms of volumes is what they're expecting, keeping an eye out on that. And also in terms of commentary, like you mentioned, pricing growth could be flattish if the commodity prices remain at these levels, so let's keep an eye out on that. But as of now, it seems like a slight bit of a miss coming in on the operating performance.
Let's go back and understand with Abneesh as well what he's making of all of these details which are coming in. Abneesh, what's your sense after digesting the numbers for the last 5-7 minutes? Do you expect sizable cuts, 1 to 3% kind of cuts, or absolutely not?
No, no, these are very, very initial time. We need to analyze results. There is a con call also today, so let's see on all that. But it's a very slight miss as we all discussed. I don't think the miss is great, and generally things are improving from a margin perspective. And this is the first quarter wherein all these transitions happening. But I don't think there is a big miss. It's a slight miss.
There is a slight miss. Costa, what's your take on HUL specifically from the stock price perspective? Because today the stock ended the day in a green and all the FMCG basket was seen to be buzzing, but with a kind of a commentary that we are seeing that their price growth could be flattish to negative in the coming quarters if commodities remain where they are, a disappointment of volume growth as well. How do you see this and what's your expectation?
Yeah, so talking about the price growth coming to be like negative or flattish, I think it was known in the market because the price cuts were taken by the company to see better volumes ahead. The important to watch out for is the commentary on the demand. So how the recovery they are looking into the rural market, and also this any revamp in the strategy under the new leadership. So that is something which would be monitored. I don't think there would be any significant cut in estimates because these are quarter one numbers. So we have another two to three quarters. Maybe Q2 might give us a better picture. How things pan out because there would be monsoon has just recovered from its weak June, and another 2 months of monsoon will give us the clear picture that how demand environment pan out in the rural India. So that is something also which will be monitored. So the commentary would play a better role on how the valuations will pan out in the coming day.
Watch out for that commentary, Costa, as well as Abneesh. Thank you so much for joining us. So that was about HUL. It's a slight miss versus the expectation. The volume at 3.